Our Bob Pisani joins us on set now with what the strategists and analysts are saying about earnings in 2019, what it means for your money and for the market.
Yeah, and it depends on what side of the divide you're on, 0% or above, and that kind of determines the way you think of 2019 in terms of the S&P. So 2019 earnings estimates are coming down, but very slowly. They were about 10% at the start of this quarter, and they're a little better than 7% today. They've come down maybe a percentage point in just the last several weeks. 17 companies have reported earnings for the fourth quarter so far. And while the numbers have been good, the first quarter estimates generally have been coming down, particularly after comments from Micron and Federal Express, who noted that while the U.S. was still strong, international trends were definitely slowing. Now, unfortunately, the fate of earnings may be in the hands of large macro issues that are very difficult to model, and this is why the markets are having such a tough time of it recently. Traders are weighing several issues. Can the Fed avoid making a major policy error? This is probably number one, meaning hiking in a slowing growth environment with low inflation. Number two, other global rate risks. So the ECB is ending stimulus. What impact will that have on European profits? Three, will there be clear progress on trade talks? And four, how much exactly is China slowing with or without the tariffs? Remember, it's a separate issue, China slowing with tariffs. How strategists and analysts interpret the impact on earnings determines how they feel about the markets in 2019. So if you think earnings growth is zero, the markets will be dead money to a lot of people. If you think earnings will be negative, most people think the markets will drop more. But if you think earnings will still be growing in the mid-single digits, and by the way, that's the majority opinion right now, then most think that the markets should rally. So it's very hard to sort of figure 2019 earnings out when you can't stick in what the impact of tariffs are going to be, how much China is going to slow down, whether the Fed is going to aggressively raise rates. It's amazing how many people are worried about the Fed making this policy error term I keep hearing. And they keep bringing up what happened, Sarah, you might remember 2011 in the ECB, Trichet was still in charge and he hiked rates in the face of all of the chaos going on.
They reversed that quickly.
That's right.
I mean, central banks are always late in terms of decisions and reversals in policy. I think the question is not just will they make a mistake, but did they already make a mistake, tightening into the end of the cycle and into a slowing economy where fiscal policy is sort of done doing the job.
Yeah, I think most people think they haven't yet made it, but if they continue to rate hike, that's going to be the mistake already. Obviously, the markets are having some trouble. I mean, it's not lost on anybody that the current turmoil started essentially October 3rd, and that's when we heard Powell talking about a ways to go before we hit neutral. So that certainly is the main factor in what's been going on, although other things like the tariffs, I think, are really going to be important now.